ultimately, if you're listening to Tom Brady or Matt Damon or Kim Kardashian and saying, they're handsome and successful and pretty, this might be a good idea, you're a moron.
Let's roll. Welcome back to the Futures Edge podcast. I'm Jim Uriel. As always, Bob Iacchino, the brains behind the operation, executive producer, and co-host. Today we have economist Keith Weiner, who is also the CEO of Monetary Metals. Now, I sat down with Keith at the New Orleans Investment Conference a couple weeks back, and he explained to me, and I don't want this to turn an infomercial about Monetary Metals, but I would like to take 5 minutes because I think your business model is fascinating. Again, I have no connection with it at this point in time in light of the FTX things. Everyone's got to make sure of that. But I do think it's fascinating. Now, I'm going to put what I think it is, and then you fill in the blanks. You're someone, a customer buys gold through you. You take that gold, you lend it out, you get a yield on that gold. So for me, who's the one who's borrowing? Did I get it right? And who's borrowing the gold, and how does it work?
So they either lease the gold out or lend it out, which are two different functions. Leasing is when there's a business that has physical gold as inventory or work in progress, like a jeweler or a refiner or a mint, and they have all this gold moving through their operation. At any given time, they have whatever, let's say 10,000 ounces. So they lease that metal, and they're happy to pay interest in gold to do that. Lending, so we just announced last week a loan. So we parcel that loan out as a securities offering, which we call a gold bond. And the borrower in that case is it's a gold mine. So they don't have gold inventory sitting around, but they have a gold income with which to amortize. Like you buy a house, you don't have the $500,000 of cash sitting in the basement, but you have salary, and every month you can make the payments to amortize the mortgage. So that particular one it's a Norwegian public company called Akobo Resources that has a mine in Ethiopia. And so we gave them a gold loan to do that. Again, they're happy to pay interest in gold because they produce gold.
It's interesting. I never, until I talked to you, and I've been kicking this around in my head since we had that conversation. I think it's fascinating. Bobby, before we move on to market things, and this is going to be focused more on metals, Bitcoin. Keith's been pretty outspoken about Bitcoin, and I think we may disagree on some things, but I'm not sure. But Bobby, you have anything more about the lending part?
I do. I'm trying to understand why somebody would lease gold instead of buy it. I mean, what's the advantage of that? I'm assuming this is physical gold, right?
So let's say you're a jewelry dealer and you have 10,000 ounces that is always in your shop at any given time. I mean, every day you're buying more and you're selling inventory. To buy it, you have to finance that somehow. So that's either equity capital. Now that's equity capital is very expensive, and inventory is a low productivity use for equity capital. You're better off putting the equity capital into growing the business in a way that adds more shareholder value, or you borrow the dollars. The problem with borrowing $10 million to buy $10 million worth of gold is, what if the price of gold drops? Let's say it drops 10%, so it drops $170 from where it is now, which it could do, right? You now have a $9 million asset against a $10 million liability. You are insolvent. And it's funny that Jim said, we're going to talk about FTX, and the concept of insolvent comes up, right? So you have to be mindful of your asset and your liability. So if you're going to borrow $10 million and buy $10 million worth of gold, you also have to put on a hedge to cover that. So you're actually borrowing probably more like 12.5 million to buy $10 million worth of gold and put, 2.5 million, something like that, in a brokerage account in Chicago in order to short futures.
I'll make that option trade for you guys. Anyone who's doing that out there, I can do that for you. But anyway,
again,
go on.
like, just talk to me like I'm a 5-year-old here. If somebody has $9 million of inventory in gold, why are they going out to buy another 10 million prior to selling that 9 million? Are you saying that 9 million is spoken for already and they need to have gold available? That's the part I'm missing. I mean, if you have inventory, it's like an auto dealer, right? Auto dealers pay on their they pay interest. They borrow money to buy cars, right? And they pay interest on the cars on their lot, which is why they're willing to make deals toward the end of the month because another payment's coming due. How does this differ from that? That's what I'm trying to understand.
Yeah, that's very similar. I mean, you can call that floor planning. I think that's the term that the car dealership would use. So every day the car dealer is getting new cars that come in off the car carrier. And every day, hopefully, they're selling cars to customers. But there's a pretty consistent number of cars sitting in the lot. Let's say every day you sell 10 cars and every day 10 new cars comes in, but there's 100 cars in the lot at any given time. So you need to finance the cost of 100 cars on a more or less perpetual basis. Another way of thinking of it is imagine an oil pipeline. It doesn't matter how fast or slow you pump the oil through, there's always a certain amount of volume of oil contained in your pipeline, which is simple math. It's the length of the pipe times the diameter of the pipe times pi. Did I get that? Yeah, it was pi times the, I'm sorry, times the diameter. Pi times the, it's
the radius squared.
Yeah,
right.
So you have to find, if that pipeline is 1,000 miles long, that's actually a fair bit of oil. That, yes, you're selling oil every day and you're buying oil every day, but there's a certain amount that you have to feed the pipe in order to be functioning as a business, and that has to be financed. So you borrow dollars and then you hedge, or what we have simply a simpler process with fewer moving parts. That hedging, people like to use the word just when they really want to sell you on something simple. Oh, you just hedge. And there's this breezy wave of the hand that goes with that word just, usually. And the problem is it isn't that simple. If markets are slow and you're in the middle of the month, maintaining the hedge is not that hard. But when markets get volatile and weird things are happening and triple witching hour occurs and all these things are happening, and that's the day that your option trader or your futures trader is out sick or whatever, your hedge can blow up on you. And if it does, bad things happen. So financing, if you have gold inventory, it's just simply easier and simpler to finance it in gold than to finance it in dollars. You have a nice match between, think of it as asset and liability, and then all those problems go away. You don't worry about that anymore. You finance 10,000 ounces of gold. As long as you have 10,000 ounces of gold at all times, then you're matched and you sleep at night.
Well, that actually makes some sense to me. Again, to our viewers here, I don't understand it 100%. I'm intrigued by it, and I plan on looking more into it. I do have physical gold. I've had physical gold for a long time. I think it's an intriguing product, but our lawyers will tell us that we are not. We want Keith on to come and explain it, but we are not sponsoring. We are not. We don't know much about it, and we encourage you to find out more about it. We mentioned FTX, which I think is I think we're going to disagree a little bit about it. And I wanted to ask you, is that because I think blaming Bitcoin here is somewhat victim blaming. The entire thing about Bitcoin, and I know you've been very critical about Bitcoin, and I still don't even know what I think about Bitcoin either, is about decentralization. FTX was a highly centralized, highly leveraged, obvious piece of shit as far as quality, controls, quality of collateral, things like that. What's your take on the whole story, Keith?
So I think I agree with you that you can't blame Bitcoin per se for what FTX did. So that's kind of either an unfair thing to do, or at the very least, it is a leap of logic where you bypassed 5 or 6 steps in your chain to jump to that conclusion. And I think there's some connection there. So the first thing I have to say by way of caveat is I don't think anybody knows all the facts yet on this case. I certainly don't. So everything I say, just prepend the word alleged. I'm not going to keep saying allegedly as I go through whatever I say, but
same with me, by the way. We don't know shit about it, right? This is just it's an intriguing story that's in the headlines, and please don't sue us. Anyway, go on. Yeah.
I can tell you I had a conversation with our CFO, and we've been very careful and deliberate about our growth. And it looks, unexciting compared to what any of these crypto, asset gatherers, asset managers, exchanges, the meteoric growth. And there was one company, I don't remember if it was these guys or another one, that had grown from 0 to 10 billion in assets in under a year. And I remember saying to our CFO, I want to say at least 8 months ago, but it could have been a year, 12, 15 months ago. I don't remember when it was. Is there any way on God's green earth that a company could go from zero to that, and during that rapid, growth period, put in place all the appropriate, team and structured internal controls and process, and build the software platform or whatever it is you're going to use, all those things. He just looked at me and just started to laugh. He's like, "Is that a question, or like what do you want me to say?" It was just like a joke. Obviously not. I mean, to get to that point where you are actually a serious custodian, there's a ton of shit you have to do. And what we do know is that they hired a I don't know if he's a turnaround CEO or a liquidation CEO, whatever his exact title is going to be. They have a new CEO now who's reporting to the court, and he basically said, "This is the worst I've ever seen in terms of internal controls. There was none." Like the one thing that was just kind of a joke was employee expense reports. They'd post it to like an internal Slack channel, and then they'd get an emoji from some random manager as to whether it was approved or not. And it's like, that's how you're approving expenses. So there's no systems, no processes internally. It's just completely. So this is what reading deeper between the lines, this appears to be what Sam Bankman-Fried himself wants the story to be spun as, is, I'm just a kid and this thing grew too fast and it grew beyond our internal controls and mistakes were made, passive voice kind of thing. But it goes beyond that, because then you have related party loans, which is a gigantic no-no, and almost, I can't think of a context in which a related party loan would be a cool thing to do, let alone with customer funds. So Sam Bankman-Fried withdraws $1 billion. $1 billion. This is the number
Allegedly.
that I've seen.
Right.
Allegedly, alleged so far. With no oversight, no board, no, this is just going on, and allegedly customer funds is what he took. And so obviously this starts to become took rather than borrowed. I mean, you can use the word borrowed, but if there's no means or intent to repay it, that's my definition of counterfeit credit.
I had a brother who had some severe addiction problems, so we had very interesting discussions about the definition of loan, borrow, or stole in our family growing up. I have a question for both of you guys, and Bobby, I'm going to start with you. And Bobby, if you rein me in if you think we're getting off topic, because we talk about macro themes, and I swear to God we're going to get to macro themes. And this is involved Tom Brady, Matt Damon, these other people who were out there championing FTX. Bobby, do you feel that they should be on the line? Celebrity endorsements, do they have to know the product that they're selling?
I mean, you would hope they do. I tell people all the time, and I tweeted this out today, that you should have a mirror somewhere near the couch that you trade when you're on your phone, on your trading desk, on your investment desk, wherever you do your work for your investments. You should have a mirror there, because ultimately, if you're listening to Tom Brady or Matt Damon or Kim Kardashian and saying, they're handsome and successful and pretty, this might be a good idea, you're a moron.
Right.
I mean,
I would say next to the mirror, have a hammer.
Football well, and just because a guy plays football well, or pretends he's somebody else very, very well, which Damon does. I don't know what Kim Kardashian does. If that's who you're going to pay attention to, you're on your own, as far as I'm concerned.
I think she's famous for being famous.
Well,
exactly.
she also had a sex tape too, which I'm thinking of going that route as well. And Bobby, to put what you said too, I think you should keep a hammer next to that mirror. And the day you listen to Tom Brady, just take it and smack yourself in the middle of the forehead. Keith, where are you on this?
Yeah, I think this is one of those situations where you say, who's to blame? And I think it's the wrong question, because there's a lot of blame to go around. If anyone invested in FTX because of Kim Kardashian or any of the others, then, in a certain sense, in a poetic sense at least, maybe not legally, they deserve what they got, because that's absolutely a stupid thing to do. At the same time,
I'm sorry, go ahead, Keith.
At the same time, any celebrity that endorses something that's just absolutely a ripoff, they need. I thought you were going with that mirror was, look at yourself in the mirror and say, can I bear who I've become? Right. Use it for some self-reflection, that here I am, my my football career had whatever shelf life it had. I'm done with that. And I read something many years ago, was talking about Calvin Klein and this idea that he had some fame. He was a dressmaker. He did like wedding dresses or something way back, and decided to basically milk his name for all it was worth, assuming that basically he'd be done, but he'd make his money and retire or whatever. And I think a lot of celebrities are kind of doing that. It's like, I'm in the spotlight now, but I'm not playing ball anymore, whatever. Let me just get whatever millions I can, and who gives a shit? You know, who gets ripped off or whatever? I don't have to care about any of that. And which again is reinforcing what you said. If you're buying a product based on these people's endorsement, realize that they don't give a shit about what they're endorsing. But if they're endorsing something that's bad, yeah, they have a certain culpability to the outcome. Now, are they legally suable for it? I have no idea. And a certain part of me says I hope not. But I guess to the extent that they become a spokesman and put their name on the line and say, yeah, I represent to you, this is good, then they've been complicit, I guess, would be the
Yeah.
concept. And
Yeah, I
fraud.
guess
Jimmy,
that's
you
what.
almost have to do a complete rework of, and I'm not defending them in any way, shape, or form. The idea that Tom Brady or Matt Damon decided this was a good idea for them, it's going to reflect on them. It is. I mean, especially as it continues to break bad in the crypto space, because those of us that, think Bitcoin has some utility, and I'm one of them, is, by the way, I did this on purpose, Keith. I wanted this on the desk when we talked to you.
Awesome.
Nice.
I think there's a
So
lot of things that
I have to ask you a question, and pardon me for my voice. I have
Oh,
a
it's okay.
nasty case of laryngitis. I'm here in Dubai at the moment for anybody watching this. Is that an analog Bitcoin that you just held up?
No, it's an actual piece of gold. But from that perspective, if they're going to decide to do this, it's going to reflect poorly on them. But I went to Michael Jordan's first restaurant, and it was awful. And I didn't try and call Mike. I still went to the chef. Now, Michael Jordan's Steakhouse, it's actually a really good friend of mine that's the new chef there, and it's been really, really good lately, but still not because of Michael. I mean, this is a buyer beware kind of thing for me. I've said before, Keith, that if people pay attention to what Jim and I say, there wouldn't have been a Bernie Madoff, because you just know the reality of shorter term investing is what it is. And part of the reason that I buy physical gold is because I want it in my hands. I really do. And I mean, I trade gold futures. I'm long gold futures right now. But, in terms of something that I want to rely upon, I mean, gold, Keith, how long has gold been money?
So far as we know, thousands of years.
Okay. So kicking off of that, right? I had a coworker years ago try to push me into the crypto space in terms of like doing content on crypto. And I said, I don't know enough about it. I don't feel comfortable doing it at that time. And his reasoning was crypto needs an adult in the room. Gold has had adults in the room for thousands of years, and this to me is, to cap my view on it, and then I'll let you guys talk again. My view on crypto is that let's get the bad actors out in order to see if it actually has utility or not, to see if it makes sense, because now stuff is just nuts, and you can't rely on what's going on or the people that are talking about what's going on.
So let's gear this toward. Gold has had a pretty decent couple of weeks, which is interesting because some of the others in the metals complex has as well. Gold was suffering obviously from Federal Reserve that was tightening, and now we're starting to see toward the end of the end or the beginning of the end or something. And Bitcoin has been dragged down by this story. Do you think gold, when you look at it now, what's the fundamental bull case for gold?
Fundamental bull case for gold is the same that it's been since at least 2008, which is the governments have gone absolutely beeping mad. And I don't know if I'm allowed to use the F-bomb or not, but and the central banks
we say yes.
And the central banks have gone fucking madder than the governments that they're in collusion with. And so when you look at that madness, right? So I always say, look, you see what the Fed is doing. You don't have to be a PhD in economics to realize this is going to end very badly. And us PhDs in economics can debate the exact failure mode and the timing and sort of what the end game might look like. But it should be obvious to maybe not a 5-year-old, but let's call it an 8th grader, that, horrible things are going to come as a result of what they've done. It's already baked into the cake. And so by owning gold, that is the one financial asset that is not someone else's liability, which is really important, because in a world where the line between borrow, take, and steal has been so blurred, and my definition of inflation is the counterfeiting of credit. It's when the borrower has neither means nor intent to repay, and actually the lender doesn't even know or give consent to the lending. People don't realize when they own a dollar, they actually own a slice of the treasury bond via the Fed, in a process that's, so much is said about it, but at the end of the day, that's what it is. And the US government so obviously can't pay the debt back. I mean, they service it. Right? That's the context which Paul Krugman said, what do you mean? You nutters are crazy. The Fed is, the Treasury has always paid its debts when due. No, they service it. But the only way they pay a bond that matures is by selling a new one that covers the principal due on the old one plus the interest due on the old one. And so it just keeps growing. It's like paying a credit card by taking out a second credit card and getting cash advance to pay the first. And since they're the government, they can write all the laws and they can force everybody to go all in. That game lasts much longer for the government than ever would if you tried to do that, on your own.
Right.
But when you see the madness of this, then you don't want to be somebody's creditor. And so the only way to opt out of that system, and so you can buy lots of things that aren't financial assets. You can buy antique cars, you can buy classic old masters paintings, you can buy Scotch whiskey, whatever, guns and ammo, I suppose. But those are not financial assets. And even in good markets, those have wide bid-ask spreads, which is a loss that you would suffer if you bought it and immediately turned around and sold it. If that spread is 25%, it's a 25% loss. Gold is a financial asset with very, very tight spreads and minimal losses, which is what makes it money, by the way. But it's not someone else's liability. If you own a lump of metal, dear Warren Buffett, sir, yes, it's the same lump of metal 20 years later when you take it out of your desk drawer. That's a feature, not a bug. It's virtue. It's not subject to someone saying, well, that balance sheet we published for the last 5 years, yeah, we lied, like an Arnold Schwarzenegger movie. I lied, right? That was his classic line from, was it Commando or something?
Oh, yeah, right. Okay, yeah.
Remember
Probably
Sully?
call that classic movie, Keith, so classic line might be a stretch, but go ahead.
I have one question. A question for you, and then we'll get back to Bobby. You get you next. So we've seen the Fed expectations change, and now, and this goes along with what you're saying too. Now the Fed funds futures curve is pricing in eases toward the end of next year. So when you look at M2 money supply growth, astronomical growth, the national debt, astronomical growth, they've tried to raise rates, and they have raised rates, and we're starting to see some cracks in the foundation. I believe the Fed is mere weeks away from pausing, months away from pivoting. And Bobby and I always have an argument about what pause and pivot means. And now we're on the same page. So I think to be clear, when you look at things like shipping rates, even the supply chain healing, that Kansas City supplier index, whatever, has gone precipitously lower. We see some commodities come off. Do you think that we are going into recession? Do you think the Fed is going to be flipping back easy relatively soon?
So I look at the Fed as really caring about credit, particularly the balance sheets of the member banks, the crony banks. That's what I think, and everything else is just so much hot air. And so, the Fed is like, most macroeconomists, they say, well, that's not a problem that matters or whatever. I kind of think of them as like this ivory tower. It's 100 stories tall, and everything they do is hurting the little ant people down below. But, from 100 stories away, you can't hear them. If they're on fire or whatever, you can't even really see it from 100 stories up. So they can just laugh and, sip their wine and, just say, well, that's fine. It's not a problem. Meanwhile, of course, it is a problem to those that are getting caught. There's probably very few businesses that can afford to pay the new interest rates, and for a variety of reasons. And as debts roll over, a lot of businesses are going to find they can't, and that's going to cause a real crisis. To me, the only question is, so all sorts of things are on fire. but 100 stories down, so the Fed doesn't really see it, or they can pretend it's not an issue. But as the problem gets worse, the flames get higher. So it's a matter of, when do the flames get up to like parallel with the Fed's window on the 100th floor? They could say, oh dear, George, I do believe there's, the world's on fire. We should do something about this. And it's like, when do they notice like all the problems? And of course, they react. By the time they react, a great deal of destruction is baked into the cake. So if you look at, I'll just pick one sector, which is like, it's not really a sector, but it's an area of the economy, startups. I mean, every venture capital firm has said, you should plan on not getting any more money, get to cash flow break even, do as many layoffs as you have to do, whatever. As you let this, one by one, those companies are going to fall over and die because they're starved of capital. You wait till you get to sort of midway through that and then say, oh, well, we're going to lower the interest rate. That's not going to make capital available to any of those guys. They're all dead. They're all, walking dead at this point. And then the layoffs that come and the losses that hit balance sheets, and then the venture funds that now have a black eye on their record. And so it's much harder for them to raise the next, fund 7. Well, you didn't do very well for us on fund 6. It looks like you lost a lot of our money. Why should we give you, So those things take years for, the next fund manager to build a reputation. And, that's why, like, after 2008, of course, they lowered interest rates. When was there a perceived recovery in the broader economy? Arguably 2012, I think. It takes years, and the leads and lags are built into this.
Bobby, just let me comment on that real quick, and then you got the question too. That's thing that we've mentioned on the show several different times. They think that they can flip it on and off like a lever, and they really have no idea how they wipe out this lowest class, and that never gets replaced. But just to put, yes, I agree with you 100%. Bobby, what do you got?
Yeah, Keith, I wonder if I can ask you a little history question on gold that I don't know the answer to. And I liken it to the reason why I grew up believing in a God. And it was more about being afraid that if he actually existed and I didn't believe in him, he'd be pissed off at me. That was the reason. So I guess what I'm asking is, when did gold become money and not just desirable to make jewelry with? And I don't need a date. I'm just wondering about the process, and why did it become different than, say, diamonds or sapphires or rubies? Because at one point it wasn't different, right?
I think it always was different. So I can talk about the process, and I can say there is a definite date. The first gold coin was coined by I think it was the city-state of Lydia, and it was 600 and something BC. There's actually a gold coin. I believe before that, gold was being traded as call it barter with gold, but as an intermediary, an indirect medium of exchange before that. But what the coin does is it standardizes it. Now everyone knows you don't have to test and weigh all the coins, you just count them. And so you can pay by tally rather than having to somehow assay each bar of gold or whatever. So that makes things much more convenient and reduces a lot of friction in the economy. But so far as we know, like 4000 BC, the Egyptians prized gold. And I think there was even a time when it was prohibited for the common person to have it. But, it's one of those things that the cat gets out of the bag over some period of time, and then everybody starts to possess a little bit of it, and you can never get that cat back in the bag. A friend of mine wrote a book called The Dawn of Gold, in which he argues the Neanderthals were picking gold nuggets out of the stream beds in Europe 13,000 years ago, based on conversations he's had with anthropologists. There's no way to know that. I wrote an article for Forbes back in, I think, 2012, talking about the process, and it's basically the coincidence of wants, right? So let's say I'm the guy who pulls fish out of the river, and we're just starting to have a village that's rising above subsistence. So we're no longer just every person just having to constantly work to feed themselves, but we're starting to accumulate a little bit of surplus. And that's what makes trade. If you're not producing a surplus, there's nothing to trade, right, and no one else will have anything to trade either. So you start to specialize. It's okay, I'm the guy who's better at pulling fish out of the river. You're the guy who's better at sewing leather moccasins. So I come to you and say, let's do a trade. I got some, or so you come to me and say, I've got some moccasins, I'm hungry, let's do a trade. And we figure out how many fish equals one pair of moccasins, and the trade happens. Now tomorrow you're hungry again, but I don't need another pair of leather moccasins. Let's say those last, 6 months or a year. So you say, let's do a trade. And I'm like, hey, look, I still have new moccasins on my feet. I'm good. So you suddenly realize that you have to wander around and find somebody who needs moccasins, who has food to trade. And that becomes very arduous and takes a lot of time. And you spend more time looking for that right counterparty than you do in producing moccasins. So somebody figures out there's an intermediate good that even if you don't necessarily need, let's say, salt, you trade for salt because anybody else would be happy to take the salt and trade. And so that's kind of the evolution of an indirect medium of exchange. And then one by one, people discover which goods are better at that than others. And you can actually stack rank all the goods by those. They didn't think of it as spread, I'm sure of it. But the one that has the least spread is the most marketable. That's the one that involves the least losses to trade in and out of that good. That's the one that everybody wants because it does that. And once it is adopted generally as a medium of exchange, it becomes even more marketable. It was already the most marketable. It's why it was selected. It becomes even more marketable when everyone is selecting it.
So if I could, in terms of my comparison between, say, diamonds or rubies, there's more loss with those because they're obviously much more variable in quality and size, and gold versus another piece of gold, as long as it's pure, it's pretty much homogeneous and malleable. Does that make sense?
I mean, even in those days, it's the same as today. If you came to me and said, I've got this diamond and it's the most valuable diamond ever, and you can describe all the qualities, I'm going to kind of squint at it and say, I'm not sophisticated enough. I have no idea whether that really is a good diamond or not.
That's a great answer.
And then on top of it, you obviously can't cut it in half. If it's worth twice the transaction value, I'm selling you whatever piece of land, and that diamond is worth double, like you can't cut it in half. And obviously, if you cut it in half, you can't reassemble the pieces. Gold, not only can you divide it, but you can recombine it by melting it. And anybody would have had access to fire to melt gold and, recombine it. So it had all the sort of physical properties so basically, as soon as you say divide and recombine, it has to be a metal. There's nothing else that can be recombined like that. And then of all the metals,
couldn't it have been platinum or palladium? Is it just not because it wasn't? It started out as gold, and that's what gained momentum.
in theory, I suppose in theory it could have been, but I don't think the ancient world had platinum or palladium. It had gold and silver. Okay. And I think technologically refining those metals, is a bit like, so originally they had electrum. So I think and I'm possibly straying out of my swim lane to talk about the achievement of Lydia. I don't think that the coin itself was the achievement. It was rather that was the time when they were able to, electrum is an alloy of gold and silver, and they couldn't separate it up until a certain point in time, until somebody invented a process that would separate those two metals. I think that's what made Lydia's gold coin possible. And before that, it would have been electrum, which was valuable, obviously, for obvious reasons. But I don't think, a lot of the other metals necessarily, like at that time, that was the Bronze Age. They didn't really have iron even,
right.
Until, basically the sort of Middle Ages or Dark Ages, 1,000 years later. So I don't know when platinum became a thing, but.
Sure. Yeah. Can we branch into silver for 1 second? Because when I look at gold, silver, and I have them both. Well, I have gold and physical, but I have both in paper. Silver to me seems that the fact that it straddles the precious camp and the industrial camp, particularly when we're looking at the electric revolution, if we're going to really see the electric revolution, and that belongs in a lot of solar panels, things like. So silver, when you look at them together, do you look at silver? Do you consider it, because you're mostly involved in gold? Is gold your focus? And do you have thoughts on silver?
Yeah, so our company is Monetary Metals with an S plural, because the monetary metals are gold and silver. And I believe silver still is money. It's been abused and neglected and put down. Even if you think gold's put down, you see what happened to silver in the 19th century. But I do think silver is still money, yes.
Okay. So, Bobby, you got anything else?
No, I got my two main questions answered. That was great. Those
So
are great answers, by the way, Keith. I really appreciate that.
Yeah, this is so funny because I did not think the conversation went in such an interesting route to me. I could talk about this forever. And okay, when I think about gold, I always wonder, like when I argue Bitcoin, like gold is just something that doesn't have much of an industrial component to it. But you just laid out some reasons why it has been a medium of exchange and has advantages. Before we let you go, we'll just keep you a couple more minutes. I want to talk to you about Bitcoin because Bitcoin seems many of those advantages we said of gold. Bitcoin, if you squint and tilt your head, you can see those advantages too. You can break it up. What do you not like about Bitcoin?
So I think the most important, especially in a more modern context, aspect of money is the thing that you take home. And it has to be, like we're physical beings that live in a physical world. There's a time when you don't want to take a flyer on this, call it the system, and you want to take your marbles home. They have to be marbles. And gold is absolutely the best thing to take home. And Bitcoin isn't a thing. I mean, you know, people talk about self-custody and they're kind of missing the point that it's a number that's maintained on someone else's database, you know, and if you think there's going to be problems with either the internet, the electric grid, just to name two obvious ones, or there's going to be some radical changes to the incentives that apply to the miners as the halvings keep continuing, and there's less and less juice to be had by mining new ones. You know, what might the miners do? And you know, nobody knows, but we understand that when incentives change radically, behaviors change radically. This is pretty established economics here. There's nothing I'm making up on this. So if you have questions or concerns about the future of the system or the stability of the system or the soundness of the system, and FTX does impinge on that to some degree. There are people that are just throwing in the towel on crypto because, okay, maybe that doesn't directly impact Bitcoin, but in an indirect way it does, because it's, you know, it was one of the trusted exchanges and suddenly, you know, blowing up with, you know, almost no warning. If you want to just sort of cash out, redeem your currency for, so what currency used to be is a liability issued by an issuer. So, you know, so you give your gold to the bank, they give you this piece of paper that says you can get your gold back whenever you want it. The bank did this. The business model wasn't to charge you, you know, for the exchange and then charge you on the way back and charge you for storage. The bank was raising capital. They got that gold and they put it into the bills market and earned a couple of percentage points a year, and they didn't have to pay. The currency didn't bear interest, so they only had the administrative cost of running the program, and they got essentially free capital to put into a market that was paying a couple of percentage points. But anyways, when you didn't like the banking system, didn't trust it, didn't whatever, you give them that piece of paper and you redeem the gold coin that it was a token that, you know, paper wasn't the value, it was the gold coin that we redeemed for. And you take that home and you say, look, I'm opting out of this crazy, insane thing. So Bitcoin is an attempt to say, okay, what if we had the perfect currency ledger, but there's no asset actually backing it? We're going to declare that the liability of the issuer is I liken it to a magnetic monopole. But if you look at physics, there's no such thing in reality as a magnetic north, you know, piece of iron that's a north only. It always has a north on one side of the iron and south on the other end. And so every financial asset is an asset to the holder and the liability of the issuer. And Bitcoin is the magnetic monopole of financial assets. It is an attempt to be just an asset only.
So here's a question and a comment, Keith, and I'm not sure if you're the right person to ask. Honestly, Jimmy, it's something we should have asked Mike Alfred. So gold doesn't need anything to back it because it is the thing.
It is the thing.
So
that's right.
It's the thing, right? It doesn't need backing because it's in your hand and there it is. I guess what I'm asking is there a situation where if somebody keeps a securitized wallet with their Bitcoin in it, you know, one of the things that Mike Alfred told us was that, you know, if you want to leave the country, you could take your Bitcoin with you, just put it all in one pocket. You could have $100 million of Bitcoin in something the size of this, right? And you just go country to country, do whatever you want. But at some point, unless Bitcoin is transactable, if you can buy the moccasins, or if you can't buy the moccasins and you can't buy the fish, it's just this thing, right? So when you say it needs, the Bitcoin proponents will tell you it's backed by the ledger. But let's say there's, I mean, I'm going off the rails here, but let's say that there's a big electromagnetic cyber attack. What can you do with this? Whereas gold, yeah, you can't carry $100 million of gold in your pocket, but you can carry $10 of gold in your pocket or $20 of gold in your pocket. And you can, that's the thing that I like about gold over Bitcoin currently. Am I off the rails here or no? And by the way, I like owning both. I just don't like owning Bitcoin till all the bad actors are flushed.
So I like to use the word redeemable rather than the word backed, because backed
Okay.
can mean almost anything to anybody. It's backed by the network, it's backed by energy and whatever. But redeemable means something specific, that there's a deposit that you give your money and have the right to get back at the end of the day. And Bitcoin pugnaciously, in my opinion, does away with the need for that and just declares itself to be, this is the asset. And but anyway, there is no such thing as redemption. Bitcoin, just like the dollar, is an irredeemable currency. Now, unlike the dollar, is actually backed by debt. So the thing that props up the value of the dollar is every debtor. I mean, what do you do if you're a farmer who's in debt up to your eyeballs? You have to frantically grow as much wheat as you possibly can, as efficiently as you can, dump that on the dollar bid price for wheat in order to raise enough dollars to service your debt. And the deeper that everybody goes into debt, the more that this is the perversity of the system. This is why the quantity theory of money breaks down. The more that people go into debt, the more demand they have for the dollars they need to service it. So the dollar is irredeemable, but it's backed in that sense. Bitcoin is not redeemable and not backed. It just is a thing that they assert it's a thing, but actually it isn't a thing. It's, when you have a cold wallet in your pocket, cold storage wallet, you don't actually have the Bitcoins. The Bitcoin, you have a key that's a cryptographic key. The Bitcoin exists in the blockchain, which is a database that basically says, you have Bitcoin because they say you have a Bitcoin. So it's a very curious relationship you have with, a network of third parties. You have whatever it is they say you have, and you have the password that lets you unlock it. But at the end of the day, the whole thing is unstable. So I had a debate. I was invited to debate Bitcoin Pierre Rochard at the Soho Forum, which is sponsored by the Reason Foundation. And it was held in Auburn, Alabama at the headquarters of the Mises Institute. And so we had a chance on stage to make our cases respectively. And the case that I made was that Bitcoin has no mechanism to stabilize its value. Its quantity is very well understood to be stabilized, which is generally presumed to be the same thing stabilizing its value. And I argue that it isn't, and I said it's never going to be stable, which means it's never going to be usable as a means of finance for productive enterprise, and therefore as a medium of exchange. What astonished me, and probably the audience, is that Pierre agreed with me, conceded the point that it is never to be stable, and and which he thought was a feature, not a bug, and I argued that's a bug, not a feature. And I won the debate by pretty large margin, probably because of that one point. That you need stability. So like people on Twitter will tell me, this is where you put all your savings in. I said, what do you do? You're an 85-year-old, widow, and you have no further income potential in your life. You put all your savings to this thing, and it has an 80% drawdown, in 6 months. What do you do? And he said to the audience, buy more. That's what he said.
That's dumb.
I kind of cheated, right? So the rules were, this was his final rebuttal. I'm not allowed to say anything. I'm sitting there on the stage. Gene Epstein, who's the host of the Soho Forum, sitting next to me. As soon as he said, buy more, I silently mimed to the audience. I kind of pulled my hands up like this and shrugged and made this face. And then Gene Epstein is kind of like, you can see it on the video, is kind of like, now, you're cheating. I'm like, yeah, I know, sorry. And that's the root problem with this thing, is not stable, which means you can't put your savings into it. I mean, you can speculate whatever portion you are prepared to lose 80% of. Sure, great. You can't put your savings in it. And if I'm a business, if I'm a farmer, I would never, ever, ever dare to borrow Bitcoin, because if the Bitcoiners are right and it goes up 1,000 times, my mortgage just went up 1,000 times. I'd be destroyed. I'd be incinerated. So you have to have money has to be stable. And that's the thing. That's why they put down gold. They say, well, gold isn't going up the same way. And I always say on Twitter, gold, Bitcoin is obviously superior to gold at skyrocketing and also crashing, right? But that's not money. That's a high beta, speculative asset. And have at it, boys. If you think you can time it, you think you have the right way to read the charts or the stars or read people's palms or whatever, tarot cards, have at it. But it isn't money. It doesn't work like money. And gold has always, it's stable. And been stable for thousands of years, and that's I think the key difference between the two.
As it is Friday afternoon here in Chicago. No, you said you were in where are you?
I'm in Dubai.
In Dubai, and are you staying there a long time, or are you coming back soon?
I'm actually headed on to Singapore and then Sydney, and I come back December 10. But I'm here for about a week and a half.
Sounds exhausting. Sounds exhausting. Your life sounds exhausting, but I hope you enjoy it. Yeah, we have to cut this short. I got a restaurant I got to run tonight. So thank you so much. This is a fascinating conversation, and it changed the way I think about gold and Bitcoin. I still have a lot of questions that are unanswered, but not by you, by the assets in general. But thank you very much. I hope you enjoyed yourself. Thanks for coming on, Keith.
Thanks for having me.
So I thought that was an interesting conversation. I did learn more about gold too. I disagree about the Bitcoin thing too, because there's different layers to it. And I'm going to do a gold trade and a Bitcoin trade. There's different layers to it. And Bitcoin, broader adoption, traction, every medium of exchange is an agreement between parties, right?
Mm-hmm.
I mean, what do you think?
Well, I just think, and I've thought this for a while, I still can't get my mind around how many Bitcoin people I talk to, how it's better than gold. The only one and again, somebody, if you're watching right now and you have that argument, and I'm not making an argument, I'm asking. I think what Keith said about, you have an 80% drawdown, that can happen in any asset. It's happened in gold over time.
It's happened in stocks, yeah.
Yeah, it's happened in stocks. So I don't know how valid that is. I know he was making it in a different context, but I need someone in the Bitcoin world to explain to me, what do you do if it doesn't get adopted as currency? You're still always moving into fiat, or you're going into gold to barter with the gold. I think he did a really good job of explaining to me why gold became money and other valuable things that were pretty and shiny didn't. That
Right.
was very enlightening to me and interesting. So I think the conversation was great. I think I'm still going to accumulate gold, and when the bad actors are out of Bitcoin, I'll probably accumulate that as well. Simply because we trade. That's what you and I do. So.
Mm-hmm. So speaking of which, now that was our macro talk. Now we're flipping into our trader caps. Yeah. And by the way, both these trades I'm going to talk about. When we talk about here, it's trades that we're thinking about doing, trades that we have done. In this case, there is reasons why I'm not doing these trades. I have lots of Bitcoin. Well, it was a lot more until this FTX thing. And I have lots of gold as part of my long-term dollar. They're idiots and bad stewards of our currency hedge portfolio. So I would be more likely to trade futures from the short side if I saw setups, and these are long trades in futures. Does that make sense, Bob?
It makes a ton of sense, yes.
So I may make these trades come Sunday night, but I probably won't. But these are setups that I looked at that I liked. I think if gold trades 1790, that's a stop-in spot. When I last saw it before I left the trading floor, it was about 1765. So it's got to rally a bit from that. If it trades 1790, looks like a breakout to me that it trades up to 1900. Place my stop at 1740 below. That would be a gain of, if you use the December micro CME gold contract for that trade, you'd make $1,100 if it reaches the target. If you're stopped out, you lose $500. Do you like the technical setup?
I do, and I like the trade because I think right now a lot of the view of what's going on is similar to what I think, where people are like, okay, good, get rid of bad actors. I still believe the people remaining that are holding Bitcoin that didn't sell at 52,000, or I sold everything in March, they're not looking at it. Again, we talked to Mike Alfred. He's like, I don't care where it goes today or tomorrow or the next day. I think that makes up a lot of what's keeping Bitcoin at 16,000. So I think it goes up from here.
So you think gold goes up from here, right?
Yeah, I think they both do.
Yeah, so do I. And the other trade is going to be Bitcoin too. You have a trade today, Bobby, or no?
No, and the reason I'll tell you why. I want to sell the 10-year, but I needed to go to the 10-year yield. So I think higher yields are coming, right? No, I
By
said
the
that.
way, we on this show we talk about the CME micro yield contract, which is
Yeah.
inverse to the 10-year. So it
So
means buy the
actually,
yield contract.
actually, I said that wrong. I think yields
Yeah.
short term are going lower, and
Oh, okay.
but we came really close to my target on that already, which was 368. So it went so far yesterday. That was the trade I was looking at for today, is lower yields, that now I think I needed to rally up before I would think about a trade on that. I want to buy the euro. But I think as the 10-year yield rallies back up to where I could sell it, the euro is going to suffer. So nothing lined up for me to put on a responsible trade. There's also the thing that I think we should think about with these trades. And I appreciate you saying I might put it on Sunday. No one's going to watch this until Monday. So I decided it wasn't necessarily a good for me to put on these trades that had all these caveats, but I will likely have one next week.
So it sounds to me like
But we
what
don't
you
have a show
just said.
next week.
We don't?
Thanksgiving, we don't. No. Next week's
Oh, we
Thanksgiving.
don't. Okay.
So we're taking
Oh, yeah,
Thanksgiving
that's
off,
true.
and we're taking the 2 weeks around Christmas, New Year's off, and then we start again in January.
Oh,
Well,
very
we've got
cool.
a few shows.
I had a question.
We've got oh, his name is escaping me. And I don't want him to see this now that his name is escaping me. We got somebody big coming up. I'm just gonna pretend it's a surprise.
Okay, good. Yeah, pretend it's a surprise. We can't tell you guys right
Bear
now.
Traps report. Bear Traps report.
Oh yeah, no, I love that guy. Yeah, yeah. So that's Larry McDonald.
Yeah, that's not who it is.
Who's Bear Traps?
Oh, I talked to him
Okay.
recently, so he might be making an appearance as well.
Okay, good. Anyway, so we talked about Bitcoin a second too. The other trade I'm looking at Bitcoin. I'm also long Bitcoin too. So if I was going to trade the futures, I'd be more likely to trade short. But the setup I'm looking for too, because I'm impressed that Bitcoin, with all this news, is only off as much as it is. Are you as well?
Yes.
Okay, so it's another breakout pattern. If Bitcoin trades 17,200 above, I think it is shrugged off all this bad news and is ready to go higher again. So if you use the November micro Bitcoin contract from the CME, if you put a stop in to buy it at 7, again, this is not a recommendation. This is just the way I'm looking at it, the way I would trade it if we're forced to trade it, and I might. 17,200 is a stop in with a target back up at 20,000. Remember, that was the magnet level before this stuff started, and a stop out below at 15,100, which means then it's given up the ghost and seems like it's heading much lower. That trade would make $280 if you hit your stop on the upside, and if you hit your target on the upside, if you're stopped out, it loses 210. My guess is you're going to like that trade too, because you like the gold setup as well, right?
So since I gave you why I like the Bitcoin trade when you mentioned the gold trade, I'll give you why I like the gold trade now. Since now that you mentioned the Bitcoin trade,
and you're not even drinking bourbon.
Yeah, I know. I'm drinking water. That's what's probably got me screwed up.
That's what's got you screwed up. It's bourbon time.
To me, it's a story of, I think we're going into stagflation. I don't think we're going to have a strong economy much longer, and I don't think they're going to have done enough, and it's going to take hold enough, especially if your pause to pivot is right, to control inflation. And if we go into inflation, gold works. I'm sorry.
Yeah. So
gold works.
By the way, I disagree with Bobby. I think inflation is coming off, but there are some things that have me worried. Just today, Governor Pritzker announced giving donate $1 billion, pushing into the economy to help people pay the rent. These are the things that make stagflation. The government is not serious about addressing inflation. No. The Federal Reserve is serious about addressing inflation, and this push-pull could lead us in a terrible spot, which I'm very, very worried about.
Let me just touch on that for a second before we go, because do you know what? So we just had a positive CPI, first one, by the way, where it was positive for the economy, right?
So negative CPI, right? I mean, came in lower, right?
It's never been my contention that inflation is not going to come down from a rate of change perspective. It's always been my contention that inflation never comes down because it's an index. The only time it comes down is during recessions. And the only caveat to that is if we're in stagflation, by definition, it won't come down in a recession because that's what stagflation is. In the last CPI report, the only thing to actually climb that I noticed, the services. And that's one of the things it doesn't lead. Rent came off, but people are already paying the old rent. So like new rents are lower, but old rents are 12 months of the higher rent for the most part. Autos are coming down dramatically. Food year over year is now flat, but it's flat from a higher price. So these are things where people, when you look at the rate of change, yes, it's going to fall dramatically. But when you look at where the consumer price index is, it's going to continue to tick up and people are already suffering. So that's always been my contention. That's why I think stagflation will be here, because you don't need a higher rate of change. You just need those prices to continue to be elevated. So from that perspective, we don't disagree.
Right.
I mean, obviously inflation was always going to come off. It's Luke Grumman. He's coming up.
Oh, yeah. Oh, I
Yeah,
love
we got
Luke.
Luke Grumman
Okay,
coming
great.
up on December 9th. I want to make sure everybody knows that. We got Valina coming up, who
Oh, I
I'm
love Valina
really
too.
excited
Yeah.
about that one. Just what she does for a living. It's fascinating to me. And
Yeah.
then we've got Mike Arnold, and then we're going to finish the year out. But we've got some really big names next year already lining up. So
That's
really
outstanding.
big names.
Good. All right. I got to go. I got a bar to run. Yeah.
Go run
All
it.
right. I'll see you guys. By the way, we're just talking about stagflation. It's Friday afternoon. If people have, oh, well, yeah, they're not seeing it till Monday, so they can be depressed on Monday. I was going to say, I'm going to go have a drink and forget about this shit.